Hello everyone, today I'm going to share about my views on the current market outlook. I will try to present both bull and bear cases objectively, and hopefully this video can value add to your own research, especially for those who are too lazy to research. But a quick disclaimer, some of the information are facts while some are just personal views, and they are definitely not financial advice, alright? Okay, before I dive into the details, as usual, hope you can help with the YouTube algorithm by liking this video. Your little support means a lot to me. Alright, the first quarter of 2022 is almost over, and the stock market has been very choppy so far. Most long-term investors' portfolio are in the reds for the last few months. My friend even asked me, with this volatility and so much paper loss, how do I sleep at night? So my answer is, I don't drink coffee after 7 PM. Just kidding, the answer is I am a long-term investor. Long-term investors usually should not be too concerned about the market volatility because history has shown that the market always recovers. For example, my portfolio recovered from negative 7.5 thousand US dollars, which is about 10k Singapore dollars, to about 1k US dollars now, all within a month. It's crazy. Now, let's take a step back to see what had happened since the start of the year. In January 2022, the whole stock market started its downward trend, which lasted all the way till this month. Then, something magical happened on 15 March. Various big cap stocks started to rally, and this rally went on for quite a number of days. Just look at the number of solid green candlesticks that Tesla and Apple had. Total 9 days of rally, what a bull run. So, does this mean the market is recovering and we are heading to the moon? Are we really out of the woods yet? Let me present you the bull and bear cases. First up, growth stocks have been hammered down by more than 50%. Some even got slaughtered by up to 60 to 70%. For example, Snowflake dropped from $400 to $220s. Sea Limited from $370 to around $120, and Teladoc from $156 to $60s range. Not just that, even some of the other traditional solid stocks like PayPal and Facebook are down a lot too. So bulls may view that it's time for these stocks to move upwards. Next, 2 years into the pandemic, the COVID situation is better all around the world. For example, Europe has been easing their restrictions and will continue to open up their economy and travel borders. Disney are opening their theme parks progressively as well, except for the ones in China and Hong Kong. Even here in Singapore, we are lifting lots of restrictions next week, such as mask is not required when you are outdoor, social gathering can go up to 10 among other measures. Also, the less deadly but more infectious Omicron may push the community towards herd immunity. But this is just my personal view, sorry, I'm no health expert here. Then, we have the Federal Reserve announcing the latest interest rate hike as per expectation, which is 25 basis points. It seems like the market has already priced that in as we saw a rally on 16 March after the announcement. This kind of shows that most of the time the stock market prefers certainty. On the flip side, uncertainty usually drives the market down, which is probably one of the reasons that caused the sell-off earlier this year. At one point when most who wanted to sell had sold, and when these sellers dry up, the market will rebound from there. Technical-wise, various mega cap stocks are showing bullish trends, such as breaking out of the downward channels. For example, Nvidia. The stock broke above the downward channel shown by the two red lines and closed above 50 and 200 moving average. Likewise for Microsoft. And you have Apple and Tesla doing that as well. Specifically for Tesla, on 19 March, there were multiple bullish candlesticks and chart movements, and the stock went on a parabolic move up since then, from about $800 to $1,000. Alright, so those are the reasons why bulls will think that the market will go up from this point onwards. Now let's visit the bear's point of view. First up, the ongoing war. We are about 1 month into the war, and it seems like it will not abate anytime soon. What doesn't help is that there are so many conspiracy theories surrounding it, which I will not go into the details. Long story short, at this point, the outcome of this war is still very uncertain. But one thing that is certain is that the ongoing war has led to the surge in oil prices. Not only that, it also exacerbates supply chain problems and fuels inflation. In case you're not aware, both countries play a significant role in production of oil, natural gas, corn, fertilizer, neon gas, aluminium, nickel, titanium, and steel, and many more. To add on, the recent COVID outbreak in China further intensifies the global supply chain issues as many big companies have their factories and production line in the country. Next, we all know that US has been hit by the highest inflation in almost 40 years. And because of this, the Federal Reserve is now focused on bringing inflation back down with multiple interest rate hikes this year. This aggressive rise in interest will definitely hurt businesses' profits and slow down the economy. And historically, they have led to recession. It's like no matter what the Fed does, something bad is gonna happen. Well, sucks to be them. To add on, the Federal Reserve is also going to shrink their balance sheet this year to combat high inflation, as their balance sheet has ballooned when they tried to prevent an economic meltdown in the wake of COVID. To put it simply, they are going to stop pumping money into the economy. Technical-wise, S&P 500 and some other big cap stocks have been defying odds by going up for so many days. Look at this table, the S&P 500 is off to a bearish rally in more than 70 years at the start of a hiking cycle. Bears will think that this is not sustainable and it's time to cool down, because the market has never gone up in a straight line. Alright, so those are the reasons why the bears feel that we are not quite out of the woods yet. So the question now is this a real bull run or is it a dead cat bounce? I think it's anybody's guess. My view is that the market will pull back a little bit from this point. But whether it will retest the recent bottoms in Feb and March, I'm not sure. And it does not matter too much also, as I am a long-term investor. If the market plummets, I load up more shares. If it rallies, my portfolio will turn greener. All I can say is don't be too fixated about a particular outcome and don't succumb to confirmation bias. The market is expectedly unexpected. Market makers are out there to milk retail investors. And when you throw in all the macro news and stuff, it is impossible to spot the extreme bottom or top for that matter. Therefore, it is important to have an open mind and try to absorb all news and learn a little bit of technical analysis if possible. Otherwise, if you are unsure about the market movement, just stay invested and DCA weekly or monthly. Because you know, as I shared before, even God can't beat DCA. Alright, that's all for this video. Hope it can value add to your research. If so, do let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.